Hello, everybody. This is DeForest Soaries, and you're listening to the dfree podcast called In the Black. We want you to have more than you don't have, to save more than you spend. We want all of our community to be in the black so that we can have bank accounts and we can own real estate. And we can stop using GoFundMe as an insurance company. And so we listen to exciting, informative guests, some of whom are famous, some of whom are not that famous, but they ought to be. And my co-host is Tamika Stembridge, the attorney that leads the dfree Global Foundation. Tamika, how are you doing today?
I am well. We are quarantined, but I'm having a quality of life work experience now. So it's good.
That's great. That's great. I humbly share with you and those that listen the fact that I've come such a long way that just about 2 months ago I discovered that my credit score is 850, and I never dreamt that I'd have a perfect credit score, but I accomplished that after having read a book written by our guest today, Lynette Califani-Cox. The name of her book is Perfect Credit. I recommend it to anybody. I just followed her instructions and ended up with a perfect credit score. So I'm happy to have her with us today, talking about specific things that our people should know in light of the quarantine and the orders to stay home, and benefits and strategies that we can use to make it through this tough time.
Absolutely. Welcome, Lynette. So great to have you.
In the last couple of weeks, 2 million people in the country apply for unemployment. And it's just going up higher and higher. And we have part-time workers whose work won't be needed. We have full-time companies who are facing bankruptcy. We have big companies that are facing the prospect of downsizing significantly because of all things that are obvious. So there are some things you know about replacing income and unemployment eligibility. Let's stretch that out a bit.
Sure. So the main thing is that because so many people have applied for unemployment, as you just mentioned, almost 2 million folks, we've had some states where the system has crashed. We've had a lot of people say, oh, it's not so easy to get on the phone. When I've tried to get on the phone with these people, or even doing it online has been a challenge. So I do want people to claim any unemployment benefits to which they're entitled, but I also want them to understand that they can get cash and payments through other sources outside of unemployment as well. And two of those sources are paid sick leave and paid family leave.
Yeah.
So we talked a little bit about the paid sick leave being up to a maximum of $511 per day, and that lasts for 10 days or 2 weeks worth. Now let's talk a little bit about paid family leave, because different folks will be eligible for this. Even if you haven't been diagnosed with something, COVID-19 directly or coronavirus, even if you haven't sought assistance from a medical practitioner, if you're in the situation where you're caring for somebody who's been diagnosed with COVID-19 or coronavirus, you're eligible for paid family leave. If you're caring for a son or daughter because school is out, or the child's daycare center is closed, for example, due to COVID-19 precautions, then you're eligible also for paid family leave.
Really? And that's a federal, that's true in every state?
Oh, absolutely. Yes, it is. This is federal.
Okay.
This is federal what we're talking about.
That's great.
Yes, this is for every state.
A color, a number. I'm more than my credit score. But a low score means a closed door. Higher interest rates for cars and mortgages. But change is easier than we think. With Credit Builder Plus, a simple loan can build your credit. So we can all get to where we want to be. Green. Let's get to green together.
So again, that's why I said it's really important for people to know, and this just passed a week ago.
Right.
So I think it hasn't really, the message hasn't quite filtered out there. And there's some, a little bit of nuances here, but I just think that by and large, we need to kind of let people know that, oh, okay, I need to start trying to apply to get paid family leave benefits as well. Now, let me tell you what the dollars amounts are for these.
Yeah.
So, whereas paid sick leave is going to give you 100% of your regular pay up to that $511 per day,
Mm-hmm.
paid family leave right now is for 2/3 of your regular pay, and it's up to a maximum of $200 a day for a 5-day work week. Now, the maximum benefit overall is $10,000. So let's say you did get, let's say you were making $78,000 and you got $200 a day. In 5 days, that's $1,000.
Right.
So you stretch that out over 10 weeks, then you could get $10,000. And again, that's the maximum, of course, for the paid benefit. It could be the paid benefit can last for 10 weeks, and they have a little nuance under the law, because this is part of the Family and Medical Leave Act, which that allows for 12 weeks of leave time. So the first 2 weeks, and it depends on how your employer does it and all that, and what the employee chooses to do. But the first 2 weeks can technically be unpaid, but then your paid portion can run for 10 weeks. So it could be 12 weeks total. And if you're an employee, you can opt. You can say, okay, you know what? I want to use my accrued leave time for the first 2 weeks, if that's available, if you have some accrued leave time already. So,
and this does not cost the employer any money. This is government money. Is that right?
That's right.
Mm-hmm.
That's right. And there is another category of folks who are going to be eligible for paid medical leave, paid family leave, and it's anybody who, what they've said in the sort of fine print so far, and all the details aren't, because this is all just new, and some of it they haven't even told us what's going to happen, because you're going to have to retain some documentation,
right,
to support your eligibility. So, of course, if you went to the doctor, keep your records for that. Of course, if you had a COVID-19 diagnosis, if your kid's school was closed, keep records of that. They haven't said specifically what the documentation is going to be, so we don't know that yet. But they have said, okay, you're going to have some documentation. They're not going to just take you at your word.
Right, right.
So, and again, some states, they could have additional paid leave requirements. So, Pastor, I know you're in New Jersey, but just over the water there in New York enacted a measure to do sick leave and some job protection, related to coronavirus. And they had their own sort of guidelines. They specified if it was an employer with 10 or fewer employees, and if they had, income at a certain level, they only have to provide unpaid, but they have to protect the workers' jobs. Right. So, and they have to provide sick leave. So, there's some nuances here, but in general, I want people to understand what they could get. So that's the first thing that I would say in terms of what's available. And I shouldn't, because you probably have some listeners who are self-employed too, like us. Right. They did put in this actually some benefits available for entrepreneurs. So in general, people need to understand this concept. Self-employed people are not employees technically, so they're not entitled in general to sick leave or family leave. But let's say you have a business and you can't, carry it on due to what the coronavirus has done in terms of shutdowns and transportation bans and whatnot. There is a provision in this law, and it's detailed by the Secretary of Health and Human Services and the Labor Secretary and the Secretary of Treasury. Basically, they said, here's another category, and this is the kind of sixth and final category. If you're experiencing some kind of a, financial setback because of this, you're going to be eligible for some of this too. So, again, we don't know all the details, but we do know that self-employed individuals are going to be able to get some kind of tax credits. And what they've said so far is that you're going to get a refundable tax credit. Basically, it's going to totally offset your income taxes, and it's going to be what they put in the language was, quote, qualified sick leave wage equivalent amounts. So I sort of interpret that to mean like, oh, okay, so if the amount was $10,000 over here for this one, or $5,100 for the sick leave, they will get the equivalent amount of that as a refundable tax credit. And remember, a tax credit is way better than a tax deduction.
Right.
Because a tax credit is a dollar for dollar refund to you. So, you know, if you're on, you know, roughly a 22% tax bracket and you get a 22, let's say you get $1,000 deduction, that's a $220 reduction of your tax bill. But if you get $1,000 tax credit, that's $1,000 off of your tax bill. So the tax credits are always more valuable, and that's what they're saying they're going to do for self-employed folks.
Of course, it's no secret that the world is challenged by this horrible virus that's spreading, the coronavirus, and all of our work, all of our churches, all of our companies have had to rethink the way they do what they normally do. That includes DFree. Fortunately, the DFree classes, as they're called, the DFree program, the 12-step process to gain financial freedom is already online. We've had over 5,000 people go through the course for free. And so if you go to the mydfree.org website, the DFree Academy is where you can literally go through the entire DFree program, or your group can go through the program online for free. So be a part of what we're doing. We're excited about it. Send us an email if you have a suggestion or need that we should know about. info@mydfree.org. God bless you. You pray for us while we pray for you. Well, we've got to get this information out, Tamika. You know, I've been watching news every day. I've watched press conferences. I've watched interviews. I've listened to health professionals. But listening to the Money Coach today is the first time I've heard this level of explanation of the Family and Medical Leave Act. And if I've been watching TV every day, I don't watch sports. I don't, you know, I watch a couple of movies, but I watch mostly news. I watch mostly news, and I'm telling you, this is not being discussed significantly on the news.
No, definitely not in detail. I promise you. I mean, you seem to have teased through the documents yourself to say this is what it is, and so we really appreciate your insights today. I think it's encouraging to hear that there are some levels of support out there for people who are really being impacted by this. And so I appreciate you having taken the time to figure that out for people. Really helpful.
No, of course, you know, we always joke, and, you know, of course, everybody calls me the money coach, but I call myself the research queen because I like to research and drill down and get all the, I'm like, no, I'm going to read the fine print on this because so much is buried in our tax code. So much is buried in policy and in rules and regulations.
Right.
And, you know, most people are like, I ain't got time for that. They don't feel like reading it and going through it. But, you know, I will read it and I will synthesize it and then explain it to folks. Because at the end of the day, if you don't even know you're eligible for something, if you don't know something exists as an option or as a resource, you can't tap into it.
Right.
And so the second thing I would say, you asked about the three main things that I would share with your audience. One is, like I said, get all these sources of income to be replaced. Anything you're eligible for, apply for them. Mm-hmm. And then the second thing I would say is manage your credit and debt wisely. And in particular, understand all the payment relief that is available.
Right. That's what I want you to talk about.
Yes. So let's talk kind of quickly because there's a lot. So I'm going to just group it into, you know, just kind of quick categories. First, credit cards. In general, everybody who knows me knows that I'll tell people to make 2 and 3 times the minimum, try to pay it off in full, etc. Not now. You got to conserve your cash.
Right. So
only make minimum payments. Try to keep your credit intact. You don't want to get to the other side of this crisis and then have your credit rating ruined, okay? So on that front, minimum payments only. If you can't even do that because you just don't have the money, you need to get on the phone. Call your credit card companies, the issuers, whether that's a bank, a credit union, a lender of any kind, most of them are being extremely flexible right now and working out payment arrangements. So on the student loan front, same thing. For any credit obligation that you have, credit card, auto loan, student loan, mortgage, nobody's just going to give you the deal, so to speak, automatically. You have to ask for it. So please remember that. On the student loan front, obviously, again, we have 1.5 trillion in student loan debt outstanding. 44 million Americans owe college debt. The vast majority of it, 1.3 trillion, is in federal student loans. So here's what the feds are doing. They're giving people relief for 60 days. You can put off making payments for 60 days. No impact on your credit, they're saying. And also, they're waiving interest during that time. So the interest rate will be 0. So that's a good thing. So again, you need to call your loan servicer and say, yep, if you can't make the payment, I need to get a month of no payment, or I need 60 days, and they're going to give it to you, okay? On the private loan front, a lot of private lenders have also stepped up to offer payment plans and flexibility. Here's 2 of the big ones, Sallie Mae and Navient. They're both saying, okay, 90 days. If you have private student loans, we'll give you 90 days to not make any payments. So again, you don't have to worry about, oh my goodness, I'm going to go into delinquency, I'm going to go into default. Just get on the phone, call your private student loan company and ask them for the help that you need, and they're going to be responsive to that right now, okay?
Right.
Can I put a pin real quick? Sure. And to make sure that if you're in programs like the forgiveness program, make sure you ask that is still going to be maintained, because many of those require 120 consistent payments.
Right.
And so you don't want to lose all of what you've built by doing that.
And here's the short answer, because I went to go, again, research this. Again, ask your own, whichever your private lender is, but for your federal student loans, I'm sorry. Ask about that. The gist of what I've seen so far is, nope, you're not going to be able to maintain that. And that's a tough pill for people to swallow. And I did a video about this and shared it on social media, etc. But I was telling people about that. Even though, yes, you can get a little relief, you might want to think twice.
Right. It may not be worth it. If you've been making payments for 6 years and you only have 4 years left.
Exactly.
It's not worth It's not worth it. It's not worth, because you'll lose your eligibility to have your entire thing wiped out in 10 years.
Exactly.
Right.
Exactly. So that's I'm glad you brought that up, because that's a really, really good point to keep in mind. And I'm also telling people, I was talking to Earl about this today, to my husband, and I wrote this book called Perfect Credit, 7 Steps to a Credit Rating.
By the way, my credit rating is 850, by the way, thanks to you.
I know, I saw that. You're in that rare club.
850.
Extremely. I think I only know about 4 or 5 people personally who've ever hit that mark, like literally a perfect 850.
I was shocked.
So rare,
I was shocked.
Yeah, that's great. And usually, not only are the people who've managed their finances wisely and manage their credit wisely, but it's usually people who are just sort of really proactive about it. You know what I mean? Not just like haphazard about it. They're conscientious about it. So kudos to you on that. That was I saw that on social. But I was just going to point out that for folks who are, some people were already struggling, if we want to be honest, before coronavirus hit.
You're right.
Out of the 44 million borrowers who are having student loans are still paying off. Over 10 million were already in delinquency or default.
Wow. That's
a crazy number of people who were already, delinquent is being 30 days or more past due.
That's true.
And default is 270 days late. You haven't paid in 9 months. So, but one of the things that I teach people in the book Perfect Credit is about overall managing your credit wisely in any situation, good or bad.
Right.
And one of the lessons that I share is that the rules always change. And I'm telling you guys, believe me on this. I don't know how, I don't know what the specifics are going to be, but even though they're giving all of this, financial reprieve and relief and saying, okay, no, it's not going to affect your credit, trust me, with big data and AI and analytics and the fact that every financial move you make is monitored, tracked, sliced and diced in some way, quantified, categorized, and assessed, are you a good credit risk or not? It's my belief personally that subsequent to the coronavirus crisis, oh yeah, the rules are going to change again, and we're going to see credit scoring models tweaked. And they probably will be looking at, they'll say, well, look, all these tens of millions of people, needed a relief, needed to not pay their credit cards or their student loans or their auto loans or their mortgages. And yes, they're going to get that because they're going to have tens of millions of people. But still, within the models, I predict, they're going to say, we had this segment of the population. They didn't ask for a payment plan, or they didn't ask for, and they're going to say, this is the really strong, super, high scorers, and they're going to do a little bit of fragmentation, a little bit of distancing to say, yep, these people still have good credit, even the ones who had, even the ones who asked for a payment plan or whatever, but maybe they have the 700 scores or the 720 or the 730 scores. But yeah, these people right here, 780, 800 and above, because they were managing their finances in such a way that they didn't even need to ask, even though we had a global pandemic. So I'm telling you, the rules always change, and I would not be at all surprised to see the credit scoring models change in the wake of this crisis as well.
I agree completely, because the other side of the credit score is institutional risk. And the whole idea of the credit score is for the lender to evaluate your level of risk. And that's arbitrary. It's their choice to decide who is and who is not more or less risky. So that's exactly right. I'm sure they're constructing new models as we speak.
On the mortgage front, I don't want anybody, or even if you're a renter, I don't want anybody to fear, oh my gosh, I'm going to get thrown out into the street. No, you're not. The fact is, Fannie Mae and Freddie Mac have a hand in, 80% or so of all the mortgages in this country. And they are tied to, 8 million plus borrowers have some kind of a government-sponsored loan, like a FHA loan, for example. FHA is the Federal Housing Administration. So long story short, HUD put some rules into effect recently and basically said, somebody has a government-sponsored or government-backed, a government-insured loan, no, you can't evict them. No, you can't foreclose upon them. So that no eviction, no foreclosure rule, that ban on that, is in effect for 60 days. So that gives you 2 months if you can't, do something on the mortgage side. Even for renters, a lot of cities and states have put in place rules and regulations basically banning evictions. And so you should certainly know what's in place in your own city, your county, or your state, but just also rest assured that at the federal level, a lot of them are giving relief, and what lenders have just now been sort of instructed to do is to give relief up to 12 months. So again, you should check your own. If you have a mortgage, you should go to your bank's website, whoever your lender might be. You might have a Wells Fargo, a Citi, a Chase, a Bank of America, whoever your lender might be. And you should find out, everybody has something on their website saying, oh, here, we want to help you, or we understand during this time of COVID-19. So you can just click on that and find out and see. Some of them are straight out putting it on the website. Mm-hmm. Here, 90 days, no payment. 60 days, no payment. Or here, call us and we'll talk about your situation individually. The point I really want people to know is that I don't want you to fear being thrown out in the street, because if you can only make a partial payment, or if you can't make a payment at all, your lender is very, very likely to work with you on that. So that's something as well. What else? Okay, so the third and I guess the final thing I was going to say is about saving money. So I said before that the reason that you'd want to only make minimum payments, for example, on your credit card payments, is that you really want to preserve cash. We just don't know how long this outbreak is going to last. We don't know the extent to which layoffs and a down economy, or reduced hours, stay-at-home orders, etc., how long that will last. So preserve your cash right now. Whatever you have, hang on to it.
Yeah.
So I think that people should start looking at, creative ways to save and earn money. So, you might do something like anything, because everybody's online right now. A lot of spending is being done online. A lot of things have been put online on subscriptions and automatic pay. No. You need to check all of that. You need to look at everything that's going out the door in terms of something being tapped on your debit card that's coming out of your checking or your savings account. If something is being attached to your credit card bills and that statement, you need to really look and make sure that it's something that you want and really need to use during this time. If not, cut it out.
Yeah.
Because you can't afford that kind of financial leaks in your budget right now.
I want you to tell our listeners how to find you, because if they find you, you can tell them all the rest about the delay on income tax returns and the need to not panic if you're in the stock market. This is the Money Coach, and I want you to contact her directly if you've heard something that you need to know more about. How do we do that?
They can reach me via my free financial advice site, which is askthemoneycoach.com. They can connect with me on social media, Facebook, Twitter, LinkedIn, Instagram, YouTube, all of the channels there. And everything is either The Money Coach or my full name, Lynette Kalfani Cox.
Thank you so much, Tamika. I learned so much. I could talk to her for an hour, but you won't let me.
Listen, I was just sitting here taking notes. I was like, you know what? I had to cancel Lady O last month. I realized I haven't had time to read a magazine since I had this child, and she was dipping in my bank account. I had to shut this down. So
that's great.
That last point, do what you got to do, folks.
We'll be back in touch. We'll probably invite you to do a webinar with us. We're doing a series of webinars over the next few weeks for leaders and for consumers. So stay tuned, stay safe, stay healthy, and thank you so much for always helping us. All right. God bless.
Of course, you guys. All right. Take care.
When I grow up,
I want to be a billionaire.
Billionaire.
What if we were all billionaires?
That looks like legacy.
Investment.
Property.
That looks like me.
That looks like me.
That looks like me.
But there's a first step to this.
You've got to get debt free.
You got to join the $1 Billion Challenge. The $1 Billion Challenge.
Yes, today.
We'll be waiting. We're building billionaires.